Ladies and gentlemen, good day, and welcome to the Associated Alcohols and Breweries Limited Q4 FY25 earnings conference call hosted by Monarch Networth Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. I now hand the conference over to Mr. Rahul Dani. Thank you, and over to you, sir.
Yeah, thank you, Pooja. Good afternoon, everyone. On behalf of Monarch Networth Capital, it's our pleasure to host the senior management of Associated Alcohols and Breweries Limited. We have with us Mr. Anshuman Kedia, Whole-Time Director and CEO, and Mr. Tushar Bhandari, Whole-Time Director and CFO of the call. And also we have Go India Advisors, the IR team. So without wasting much time, I'll hand over the call to the management for opening remarks. Then we'll move to Q&A. Thank you, and over to you, sir.
Thank you, Rahul. Good afternoon, everyone, and a very warm welcome to Associated Alcohols and Breweries Limited Q4 and FY25 earnings conference call. The financial results and investor presentation have been uploaded to the exchanges, and I trust you've had the opportunity to review them. Let me first begin with a quick overview of the macro environment. The Indian economy continues to demonstrate resilience supported by strong domestic consumption, favorable demographics, and steady urbanization. These structural drivers also benefit the alcobev sector, which remains one of the fastest growing consumer categories in the country. India's per capita alcohol consumption remains significantly lower than global averages, offering substantial headroom for future growth. Within the liquor industry, a clear shift towards premiumization is underway, with consumers increasingly preferring higher quality craft and premium spirits. This trend aligns well with AABL's long-term strategy of enhancing our premium portfolio and building consumer-centric brands. Reflecting on the year gone by, I am pleased to share that FY25 was a year of meaningful progress for AABL. We strengthened our proprietary IMFL portfolio with the launch of Hillfort, a blended malt whiskey in the prestige and above category. This follows the earlier success of Nicobar, our handcrafted gin, which has already garnered industry recognition and awards. Our presence remains strong in key markets like Madhya Pradesh, Kerala, while we have expanded into newer geographies. We commenced operation in Daman in the last quarter and secured regulatory approvals from Maharashtra and Uttar Pradesh, where commercial operations are expected to begin by May 25. While our planned launches of premium brandy and tequila remain on schedule, the launch of our ready-to-drink range has been slightly delayed due to supply challenges related to equipment deliveries. We now anticipate launching the RTD range by June 2025. Operationally, while our proprietary IMFL business recorded strong volume growth during the quarter, ENA and ethanol volumes were impacted. In Q4, we intentionally held back ENA sales in anticipation of better realizations amid improving market conditions. Ethanol sales were also lower during the quarter, driven by reduced allocation from oil marketing companies. However, I am happy to share that full allocation for the remaining period has been secured, and we expect volumes to normalize going forward. At the operational level, AABL's fully integrated model remains a core strength, spanning in-house ENA production, proprietary brand bottling, contract manufacturing, and ethanol production. We now have 41 bottling lines capable of producing 16 million cases annually and maintain an ENA manufacturing capacity of 45 million liters per annum. Our ethanol plant, commissioned last fiscal year, is running at full capacity and continues to support margin accretion despite temporary volume fluctuations. Additionally, as a part of our premiumization journey, our 6,000 liters per day malt plant is under commissioning. The cask deliveries are expected by mid-May 25, after which cask filling for the aging process will commence. Production is targeted to begin by June 2025. Our partnerships with Diageo and Inbrew remain robust, providing additional strength to our overall platform. Supported by a strong balance sheet, healthy cash flows, and clear strategic direction, AABL is well positioned to sustain and accelerate its growth momentum. With that, now I invite Mr. Tushar Bhandari, our whole-time director and CFO, to walk you through the operational and financial upgrades in greater detail. Thank you.
Thank you, Anshuman, and a good afternoon, everybody. Building on Anshuman's comment, I will focus on the operational and the financial performance for the quarter and full year, along with key business updates. Starting with the operating environment, raw material price, particularly for the key grains like rice and maize, remain elevated for a significant part of the year. However, there have been some corrections in Q4. Rice price peaked at 27,500 per metric ton in Q3FY25 and corrected to 25,500 per metric ton during Q4/25. This stabilization has contributed to a partial easing of input cost pressure as we move into FY26. The resentment on FCI rice supply at more affordable rates has also supported the cost management effort. Throughout the year, operational efficiencies and disciplined procurement practice helped us maintain gross margin despite the volatility in raw material price. Moving to the financial and operational performance of Q4FY25, net revenue from operation stood at rupees 243 crore, broadly stably compared to last year's quarter. Gross margin improved to 43%, reflecting benefit from partial raw material price correction. EBITDA for the quarter was 36 crores, representing an increase of 93% year-on-year with an EBITDA margin of 15%. Profit after tax stood at 22 crores, an increase of 83% compared to the corresponding quarter of previous year, resulting in PAT margin 9%. In terms of segment performance for the quarter, proprietary IMFL revenue stood at rupees 36 crore, reflecting a year-on-year increase of 32%. IMIL revenue stood at 58 crore, growing by 18%. Merchant DNA contributed to rupees 20 crore, and ethanol revenue for the quarter was at rupees 45 crore. Operationally, for Q4FY25, proprietary IMFL volume stood at 4.82 lakh cases, registering a growth of 26% year-on-year. Licensed IMFL volume reached at 5 lakh cases. Merchant DNA volume was 3 million liters, and ethanol volume stood at 6 million liters. It is important to note that the ethanol volume during the quarter were lower due to the reduced allocation from oil marketing companies. Turning to the full year performance for FY25, net revenue grew by 42% to rupees 1076 crores from rupees 759 crore. In FY24, EBITDA for the year stood at rupees 128 crore with an EBITDA margin of 12%. Profit after tax reached at 81 crore, resulting to PAT margin of 8%. In terms of segment performance for the full year, proprietary IMFL revenue stood at rupees 138 crore, growing by 25% year-on-year. Licensed IMFL revenue reached at rupees 237 crore, an increase of 8% over previous year. IMIL revenue was at rupees 234 crore, registering 22% year-on-year growth. Merchant DNA revenue stood at 119 crore, and ethanol revenue for the year was rupees 248 crore. Operationally, for FY25, proprietary IMFL volume stood at 18.03 lakh cases, reflecting a growth of 15% year-on-year. Licensed IMFL volume reached at 18.96 lakh cases, recording a growth of 4% year-on-year. Merchant DNA volume stood at 18 million liters, and ethanol volume stood at 34 million liters. For FY26, we have planned a capex of around 100 crores, primarily to set up a maturation facility for the malt plant and undertaking other operational efficiencies improvements. With the upcoming launch of our RTD products, the commencement of operation in Maharashtra and Uttar Pradesh, and other enhanced focus on expanding our premium product portfolio, ABL is positioned to pursue growth opportunities across multiple categories and geographies. With consistent execution and financial discipline, we remain focused on delivering sustainable growth in the year ahead. With that, we can now open the floor for question and answers, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mr. Vishal Gutka from ASK Investment. Please go ahead.
Yeah, hi team. I think good set of numbers from you. A couple of questions from my side. First is on ENA front. So you highlighted that you decided to hold up ENA given that your expectation the prices will go up. But on the other hand, we are seeing the commodity cost going down. So rice, I think, because of the liquidation from FCI, that has gone down. So just wanted to get a better color from you. Why are you expecting that ENA prices hold up? Is it a derivative of ethanol prices? That is the reason that the prices for ethanol are firming up?
No, actually what had happened in Q4, the ENA prices had fallen substantially, okay, because there was a lot of availability of the ENA in the market. Because in Q4, government had allocated most of the ethanol to the sugar manufacturing companies. Okay, so people who were making ethanol, they had moved to ENA, so there was a lot of availability of ENA. So that's why we hold it up for a better realization.
Got it. And can you please help us to understand what is the price of ENA in 3Q and 4Q, just to understand sequential fall in the price of ENA?
So ENA right now is around 68 rupees.
Okay, and what was the number in 3Q?
2 rupees fall. Pardon me?
2 rupees fall. Okay, around 4-5%, 3% kind of fall that happened, right? From 70 to 68 it has happened.
Yeah.
Got it. And sir, on the single malt plant, so you started the maturity process of the malt. So malt will be available from mid of 25. Exactly, just want to understand. You are telling that the plant will commence in mid of 2025. So malt already you have started the process of maturity, or how? Can you broadly highlight on that front?
No, so production will start somewhere in the month of June to July. And then post June to July, at least maturity for a decent single malt would be 1.5 years.
Okay. So first bottle of that single malt will go somewhere around end of calendar 2026, right?
Yes.
Okay. So then we are almost 2 years away for what we call launch of a single malt brand from affiliate Concall. Is that understanding correct?
Yes.
And so this RTD drink, are you manufacturing in-house? Because you highlighted that equipment is not available. So just wanted to understand from you, are you making it in-house, ready to drink that you're planning to launch?
It in-house. The main RTD machine which was supposed to come from US. So there were certain delays in the import of that machine. But now that has come and it's under commissioning. So next month we plan to launch RTD.
Got it. Well, this last question on ethanol front. My question bit might be new because my awareness is not that great on ethanol front. You told me that allocation from OEM companies was not in full swing. So every quarter you get certain allocation from OMC companies, and that is the sale is relevant depending upon the allocation of OMC companies. Can help us understand what is exactly you try to mean by allocation of OMC companies?
So one is that you have to apply for an annual tender. So in that annual tender, you get the allocation quarter-wise quarter and month-wise month. So every month you have to they give you an allocation that this month they will lift. But it also depends that if they are falling short of below 20%, they come out in between with extra demands also. So you can apply for those demands also. But apart from that, the private companies like Naira and Reliance also are buying ethanol. So there's an opportunity to sell it to them also.
Okay. So this quarter was less. So from next quarter onward, you expect it to normalize the ethanol sales, right?
Yeah, full capacity allocation we've got.
You are already running at full capacity. So incremental, it's going to price-driven growth, right? It is not going to be volume growth for ethanol going forward.
In quarter four, the entire volume was not consumed. Quarter four, we've got slightly lesser allocation for 2 months.
Great. Hello. Wishing you all the best, sir, for the future quarters. Thank you.
Thank you.
Thank you. The next question is from the line of Aman Baheli from InCred Research. Please go ahead.
Hi, am I audible?
Yes, sir.
Hi, sir. Congratulations on good set of execution this quarter. So I had a few questions. First one is on our market penetration strategy for our upcoming states, that is Maharashtra, UP, Karnataka, Goa. So in terms of distributors and Horeca points, as we say, if you can highlight our ground strategy on that, please.
So basically, if I talk about primarily, first let's talk about Maharashtra and UP. The whole point it got slightly delayed by 2-3 months was because of we were not finding the right partner, right distributor. Now in both the places we found the right partner and right distributor. So if I talk about Maharashtra, we will be entering with Bombay, Thane and Nagpur region. So these are the regions we are entering with. And that too we are doing only premium brands outside Madhya Pradesh. That's what we've planned. We have already, so now the permits have come and the material will go in a week's time. And we have already given the support system of all the collaterals which are required to be there at the market. So that is already dispatched. So we are almost ready for everything. Same as it goes with the UP market. UP market also will be entering into a premium product first with few regions and then expanding to other regions. There also we have spoken to few distributors, and certain good distributor who holds major number of shops are also on board with us. So we see a positive response from that market also. So those goods will also go in next 15 days. Third is if we talk about the Goa market. So from Goa market we intend to supply to Pondi, Mahe. Premium brands for Kerala will go from Goa and Goa itself. So Pondi, Mahe we have already tied up. Kerala we have already planned and premium products will be there. And then Goa also we are working and starting a sale. The ENA has already been dispatched from our premises for the Goa, and soon the production will also start. The packaging material is also reached.
Okay, sir. And second question was on our ready to drink product. So what will be the selling price of it, and in what quantity are we looking to sell it?
So basically, see, the ready-to-drink market is what we see is the future would be good of ready-to-drink market, and because it's growing across the world, and governments are also encouraging low alcohol strength drinks. So like just for an example, in Madhya Pradesh, government has introduced a new license for bars and restaurants, in which government is giving the 50% of the license, with only 50% of the existing license fees of bars and restaurants, you can serve beer, wine and RTD. Okay, so we see future there is going to be a growth. In this we are going to come up with only 300 ml, 330 ml can. That is our strategy. And to just attract the young crowd, we are introducing this. To scale up, it will take time. Because we are registering in Madhya Pradesh. So once it's registered in Madhya Pradesh, we will start registering in the other states as well. Madhya Pradesh volumes are comparatively very less as compared to other states. Major volumes are in metro cities. So we will be registering there also. So whatever the problem is that in registration, excise takes a lot of time. So whatever time that happens, we will put the products there.
Right, sir. And sir, now coming on the IMFL proprietary product. our margins were significantly higher. I mean, it was beyond our expectations. So around 17%. So is this sustainable going forward if we see, or these are peak margins are we seeing in this quarter?
No, I think these are sustainable margin what we expect. So we have around guideline of around 15 to 18% EBITDA margin we expect from our own IMFL proprietary brand. And as an increase in the premium sale of premium brands which we've introduced, the margins will become better only. So just to update you, one more thing that we have launched now a full series of CP. So CP whiskey we had, CP rum we had, and now we have also introduced CP vodka. So that is in the popular category, and the premium category already whiskey is there, and other products, gin is there, so it will give us a better realization. And in Kerala also, we are going in for now super premium products as well.
Okay, got it. One last question on our merchant DNA segment. So you told you are waiting up for some higher realization. So those numbers will come in the next few quarters?
No, obviously, I started coming right now.
Sorry, I didn't catch you.
So we've already started increase in our sales from this month onwards.
Okay, so the numbers will reflect in Q1 itself, right?
Yeah.
Okay. Thank you so much.
Thank you. The next question is from the line of Naman Shah from Monarch Networth Capital. Please go ahead.
Hi, sir. Congratulations on a good set of numbers. So my question would be relating to the product launches, sir. Are we on schedule with the product launches, or we are seeing any delays of any kind?
So our product launches have been delayed by 1 or 2 months, but now we are on schedule of different states to enter, like Maharashtra, UP, and Goa, which are and Pondi, which are on immediate basis. So within next 16 months, the permits will come and the dispatches will start happening.
Right. And sir, this ENA issue that we had due to better realization. I'm sorry if this is a repeated question. I didn't hear it earlier. What was the realization that we were getting, and what is the better realization that we were expecting that led to this issue?
So basically, ENA price from 70 rupees had gone down drastically to 66 rupees. Okay, and now we are selling it around 68 rupees.
Okay.
So this happened in the month of March.
Okay. And sir, how is our Maharashtra and other states expansion going? And where are we on tequila expansion basically?
So Maharashtra and UP I had already briefed this in the previous question. So we have everything lined up now, from marketing material to distributor to everything. Now permits are expected anytime, and I think next 15 days in Maharashtra, UP and Goa the sales will start. So first is that to answer your question. Second is on tequila front. What is there is that tequila front, to call it a genuine tequila. We want to launch a proper tequila in which we can mention tequila. So for that you have to get your brand registered with the Mexican government. So the process is pending at the Mexican government end since last 3 months. And on our recent conversation which we had with them is that they are expecting it to the registration to go through anytime just after the Easter break. So once that is done, packaging material is lined up. Packaging material is lined with us, the bottle, the cap, and the carton, everything is there. So we just need to import the liquid, fill it, and sell it here.
All right. Okay, that's it from my end. Thank you, sir.
Thank you. The next question is from the line of Ms. Prachi from Phillip Capital. Please go ahead.
Hello. Hi, sir. Am I audible?
Yes, Raj.
Yes. So my question is on, sir, number of import whiskey and Nicobar gin sold in FY25. So how is this import whiskey has been transitioned in this existing geographies itself? And the second question is what is the revenue contribution from this prestige and above category, and what it is expected going forward, let's suppose in next 2 years?
Your voice is not clear. Just to answer your first question, the number of cases sold of the gin and Hillfort whiskey is around about 10,000 cases. And we've done right now only in primarily, we launched whiskey, I think, in the third quarter. And gin, the volumes are stable. The industry is stable there. And wherever we are, like for example, Madhya Pradesh, till now we were only in Madhya Pradesh and in Chhattisgarh. So in Madhya Pradesh we were number 3, and Chhattisgarh also we were one of the major players in that. And now we've launched in Delhi, and we are going to launch in Maharashtra and UP. So that's the states where the major volumes will come up. So then we will see the volume growth, and we are also planning to launch it in Rajasthan. So this is just to answer your first question. Second question was not clear. Can you please repeat it?
Yes. So what is the revenue contribution from prestige and above category, and what it is expected to be in next 2 years?
So revenue contribution from premium category is right now very little, and we expect it to increase in the years to come. Because as you open the major states, the volumes will come from the major states only.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Manisha from Bulla Advisor. Please go ahead. Hello, Manisha. Please go ahead. Since there is no response, we'll move to the next question. The next question is from the line of Mr. Yash Vardhan Singh from Peers and Peers Solution. Please go ahead.
Hello, sir. Am I audible?
Yes, yes.
So first of all, congratulations on amazing numbers. I have one question, and apologies if this is a repeated question. So what I wanted to understand is we have higher margin profiles in our proprietary brands, which is Hillfort and the Nicobar Gin. Also, we see a good amount of volume growth.
Sorry to interrupt, Yash, sir. Your line is not clear. Can you use a headset?
Is it clear now?
Yeah.
Yeah. So we saw good volume growth in terms of our proprietary brands, but the same was not reflected in the licensed and the other segment. Can you guide on if these margins in proprietary are sustainable, and also if you can comment on the volume growth part on the other two segments of our businesses?
As I said earlier, also in the previous, somebody had asked a similar question. So the proprietary brands margin which is there is sustainable because we will expect the increase in sales of our premium products. So that is there. And if I talk about the volume growth of other businesses, volume growth of IMFL licensed brand would be equivalent to the growth or slightly higher than the growth of the industry which is there. And if we talk about the IMIL, so IMIL volume growth will again happen as per the industry because that is locally dominated. We are doing only in the state of Madhya Pradesh. So whatever the industry will grow, we will grow at that rate because it's a tendering process, and tendering process in IMIL has got a capping. So we are at the maximum part of the cap of allocation under the tender which we allotted. So the major growth which we are expecting, and over the past few conference calls also we have mentioned that our completely focus is on our IMFL proprietary brand, and that's why we are under the process of making a full range of premium IMFL proprietary brands. So we will have now RTD also. We are launching a premium brandy also and tequila also. And in future, we're going to come up with our own single malt. So we'll be the company which will have an entire range of portfolio of products available for our consumers. So any state we enter, any distributor we talk to, you will have a one-stop shop. So we'll see a major expansion in our IMFL proprietary brands.
Okay, understood, sir. Thank you. That's all from my side.
Yes.
Thank you. Participants, in order to ask a question, you may press star and one. The next question is from the line of Nishit Shah from Ambika Fincap Consultants. Please go ahead. Since there was a disturbance, we move on to the next question. The next question is from the line of Mr. Hitesh Vatra from EBC Limited. Please go ahead.
Yeah, hi, good afternoon. A few of my questions got answered during this call. Just a few remain. First of all, since you have told that you just stayed in Delhi market, are you planning to move looking forward to expand in metro cities? Is that on your priority list? And second question would be that since as and when you know, okay, yeah, please go ahead.
I couldn't hear your question. Can you please repeat the question because your voice was echoing?
Just a second, please. Just a second. Am I audible now? Clearly audible?
Better, much better. Yes.
Just wanted to know about your plans, expansion plans in the metro cities mainly, as you are, since as per my understanding, you are mainly operating in tier 2 cities as of now, I think.
Yeah. So our plans for the metro cities is primarily looking at the HoReCa chain because that's where the consumer can taste the products. And even at the shops, and especially like for example in Bombay, they've got small bars, so there we are concentrating on experiencing our product. We have plans to do bar takeovers, wherein we will make the customer taste our gin and our whiskey. So that's the plan through bars and through concentration on the shops and the retail chain display and visibility and width of distribution. So we are concentrating on these four things. Plus, apart from that, we have taken on board one of the very senior person from Diageo who used to take care of Maharashtra business on board. So he will be joining from 1st of May onwards, and he will be taking care of our Maharashtra business. So he's got experience in that particular market, and he's got personal relationships with the shop owners. So these are the few strategies. Industry investment manpower is also very important because you need to have a right person who has got good relations. So we are investing into these particular areas.
Right. And secondly, as and when you enter bigger markets, definitely you are going to face stiff competition. Do you expect the margins to sustain when we go like about the margins that you have made in this financial year 25? The net margins, profit margins are around 8%, I think.
So the margins will be sustained, but initially, as you rightly said, if we enter the new market, we'll have to spend on marketing and all. So margin might shrink a little bit, but these are sustainable margins if the volume increases substantially.
Right. And are we brand and product ready as compared to like other brands in the market? Are we product ready in terms of like all the available products as other brands have?
Very much.
Fine. All right. Okay, yeah, that will be all for my side.
Thank you, Hitesh.
Thank you.
Thank you. The next question is from the line of Mayank Agrawal from Scientific Investing. Please go ahead.
Hello, am I audible?
Yes, Mayank.
Yeah, hi. Actually, I had a few questions. Like the first question is, can you share the currently monthly run rate of for Nicobar and the Hilford brand, and what has been the month-over-month growth trend for each?
So see, as I told you that we have sold approximately around 10,000 cases, and the thing is that month on month the brand is growing and the volume is growing, and the acceptability is coming. But the premium brand sale is more on the metro markets and the bigger cities. So that's where we are going to launch it, and we have permits in hand within 15 days. So we'll see a substantial increase in the volume growth in those markets.
Okay. And the second question is the licensed IMFL growth was only 4%. So could you elaborate on the factors behind the growth, and what will be the going forward growth for this section?
So our licensed IMFL growth was 4%, despite of industry being down by around 15%. So we expect, and apart from that, so industry was down and our brand sale had increased. And this will grow as per the market only because this we are only doing for the state of Madhya Pradesh. And we are primarily concentrating on our own proprietary brands.
Okay. And the last question would be, could you provide the size of the market in the states where you are currently present versus the opportunity size in the new states you plan to enter in the next 2 quarters or 3 quarters, such as Maharashtra and Uttar Pradesh?
See, size of the market is almost 10 times the size of the Madhya Pradesh, if we talk about Maharashtra or if we talk about Uttar Pradesh also. And those are much educated market and customer believes in the quality. And we do not compromise on quality. That has been our USP over the years. So we expect the volume growth to come substantially from these places.
Okay, thank you. That will be for my side.
Thank you.
Thank you. The next question is from the line of Aman Baheti from InCred Research. Please go ahead.
Hi. Thank you again for the opportunity. So I forgot to ask this before. So my question is on marketing spends. So as you highlighted that obviously to penetrate in the newer states, we would need, larger marketing budgets. So what is our, strategy around marketing in these newer states? Because obviously right, that the market is captured by a few bigger whiskey players. So what is our strategy there?
So Aman, as I said in the previous question also, that our strategy in these bigger markets is to create visibility and brand awareness. Okay, so visibility will happen at shop levels and bar levels, and brand awareness and brand tasting will also happen at the bar and the Horeca chains level. So here we plan to do bar takeovers and work at different bars. Plus, we are also in talks with a company who is known for organizing house parties every weekend. So we will be the whole gin supplier there. So through those platforms, we'll make the customers experience our product. And we are sure that because we are giving value for money to the customers, our products are very superior and priced at a reasonable price. So if the customer is happy with the quality and he's saving few bucks, he'll definitely shift to our products. But I understand that this is easier said than done. This industry is very competitive and there are big players of big companies of world number 1 and 2, Pernod and Diageo. So to compete with them, it will take time. So for that, but we are increasing on visibility, width of distribution, and right manpower and right distributors. This will be our strategy going forward.
Okay. So any figure like in terms of top line, how much would be our marketing spend? Any figure?
So right now it's quite minuscule, but we plan to increase that in the markets we go. But then again, what we are doing is that we are not doing over-the-top marketing spend, as I said. There will be no hoardings, there will be no advertisement and anything else. So primarily it will be through social media platforms and through visibility and at the shop premise platforms.
Okay. Thank you so much.
Thank you.
Thank you. The next question is from the line of Maitri Shah from Sapphire Capital. Please go ahead.
Yeah, hello, am I audible? Hello?
Yes, ma'am, you're audible.
Yeah, I just had one question. What is the guidance for the next fiscal year, FY26, on the top line and the margin?
So we expect a growth of around about, say, 11 to 15% in the top line. And apart from ethanol and in the margin guideline also, it will be on the similar lines or slightly higher.
So the top line growth does not include the ethanol
in it, right?
Pardon me?
The top line growth won't include any ethanol sales, right?
It'll not increase. Because ethanol will be flattish because we are using our optimum capacity.
Okay. Thank you so much.
Thank you. The next question is from the line of Vishal Gutka from ASK Investment Managers. Please go ahead.
Yeah. Thanks, ma'am. My question has been answered. Thank you.
Okay, thank you. The next question is from Prakash. He's an individual investor. Please go ahead.
Yeah, hello.
Hi, Mr. Prakash.
Yeah. First of all, I have a small suggestion here. In the PPT slide 34 to 39, there is a nice comparison made, but all the comparison is Y-o-Y. So, since we are a consumer industry, so there is inflation, so definitely price go up every year. So when we make the comparison only Y-o-Y, so always it show positive things. And there are many companies, what they do, for example, in each slide, on the top they just show, for example, Y-o-Y comparison, and the same category they show.
Moderator?
Sir, the line of the questioner has been dropped, so let's move on to the next question. The next question is from the line of Piyush Jain. He's an investor. Please go ahead.
Yeah, thank you for the opportunity and congratulations on the correct set of numbers. Just wanted to understand, sir, earlier also one participant asked when we gave a long-term guidance with respect to premium products. So we are saying that targeting a 50% share in maybe 3 to 4 years. So currently, what is our revenue share from Prestige and above?
Your voice is not clear.
Sir, I want to understand what is our share of revenue right now from P&A category, Prestige and above category.
From Prestige and above category?
Yes, sir.
Hello? So it's right now only around 10 to 15% of the sale of our IMFL proprietary products. And we expect it to increase to a greater extent in the times to come.
Okay. And one more thing, sir, to understand. We are saying IMFL proprietary, we are having a margin of 15 to 18%. So this number is like a sustainable something which we continue to hold this number for going forward also, or it has a potential to move towards a 20% category?
So we will expect it to hold this range.
Okay. And sir, what would be the number of ethanol sales during the year and margin from that?
Ethanol would be around 300 crores and the margin would be around 7%.
Okay. So is there any expected improvement in the ethanol EBITDA side, or it will remain in the similar category?
Pardon me?
Ethanol business, do we see an improvement in EBITDA in next year, or we expect this around 7 to 8%?
It'll be, I think, similar only. Completely, it will depend on the raw material price.
And just one last thing, sir. What are our new product launches or pipe lineup for next 1 or 2 quarters?
So in the next quarter, in this quarter, within 2-3 months, we are going to launch our RTD. Then we have got the premium brandy, and in around 4th quarter, we will be launching our tequila in Q3. So Q1 RTD, Q2 premium brandy, and Q3 tequila.
Thank you. The next question is from the line of Sumit Agrawal, who is an investor. Please go ahead.
Yeah, thank you for the opportunity. Sir, I have 2 questions. The first question is regarding the revenue growth in the IMFL licensed, where there is a considerable drop this time. So is it like seasonal one-off, or is there some other reason for this drop if I compare quarter on quarter?
So IMFL drop is around 4%. Okay, that is because the industry had gone down substantially. So industry was down around 10 to 15%. and our drop was around 4%.
So is it so?
And IMFL license is only in Madhya Pradesh.
So do you see that recovery in the next quarter, the industry as well as our, as well as our sales?
So it will remain flattish only.
Okay. All right. And my second question is regarding, sir, that as we expected, because of allocation, the ethanol kind of could not go through because of the allocation being, and there is a drop there as well. So even at at a lower realization, why couldn't ENA still be stepped up to make up for that loss in ethanol sales? Are we holding it up for better realizations and putting in inventory for next quarter, or is there some other reason?
That's what we did. So we had a huge inventory. If you see, in the month of March, we had a huge inventory of ENA.
Thank you. We may request you to rejoin the queue. The next question is from the line of Naman Shah from Monarch Networth Capital. Please go ahead.
Thank you for this opportunity. So my question is regarding, sir, so it's rather a follow-up. One of the participants asked about the marketing spends. Could you kind of give a clarity as to what as a percentage of the top line would our marketing spends be, and what is it expected to be going forward?
So market spend, we are expecting as we enter new metro places and with our premium brand, we are expecting it to be around 2 to 3%.
Okay. And currently, how much is it?
So currently, it's around about 1%.
Okay. That's it from my end.
Thank you, sir.
Thank you.
The next question is from the line of Manoj Bhura from Adinath Financial Services. Please go ahead.
तुषार जी, गुड आफ्टरनून.
Good afternoon, Manoj ji.
कैसे हैं आप?
Very good, sir.
My question was regarding byproducts. Can you just elaborate on that?
On?
How much we are producing? What is the yield of byproducts? And at what price we are selling?
So byproduct is around 8% of our top line.
Right. At what price we are selling per kg?
So the price keeps on fluctuating. So in between the price of DDGS is around 15 to 16 rupees.
15 to 16 rupees. And what is the production of that byproducts? Now normally yield is around 400 ml per kg, I think.
The production of the byproduct is as per the industry standards what we have. So because see, it will completely depend on the crop which we are using. So sometimes we are running the plant on 100% maize, sometimes we are running on mix on maize and rice. Then in between we procure jowar also. So it will also depend on the crop which we are using.
Thank you, sir. We'll move on with the next question from Garvita from Seven Island PMS. Please go ahead.
Hello. Hi, sir. My question is on the capex side. If you could please elaborate on what is the capex done for the two states as of now, and what is the capex we are planning to do?
So capex we have done approximately around, if we take ethanol plant and the bottling plant, so it's somewhere around 200 plus crores which we've done, and now around 300 crores, and now we plan to do 100 crore in this year for our malt plant.
Okay, so 200 crore, 100 crores for the malt plant and 200 crores for debottlenecking, you said.
So around 250 crores for the ethanol plant and the bottling plant.
Okay. All right, sir. Thank you so much. That's all.
And now we plan 100 crores.
Okay.
Thank you. The next question is from the line of Prachi from Phillip Capital. Please go ahead.
Hello, sir. Hello. Am I audible?
Yes, ma'am.
Yes. So, sir, the last quarter you have said that this ready-to-drink have been launch of ready to drink has been postponed to next one more quarter. And then again in this quarter, there is a delay in the launch. So what all things we have worked on, like packaging, marketing? Yeah, just give a clarity on that.
Can you repeat your question, please? I couldn't hear you clearly.
So last quarter you have said that the launch of ready to drink has been delayed by one quarter, and again in this quarter there is a delay in the launch. So I just want to know what all things we have worked on, like packaging thing or registration thing.
So for marketing, as I said, that almost collaterals are available and which are ready to be sent. And plus the ready to drink is that we will register first in Madhya Pradesh, and then we will enter into other states after registering into Madhya Pradesh. So in Madhya Pradesh, the volume of RTD is less compared to other metro cities and other markets, where we will see a major growth coming in.
Okay, that's it from my end. Thank you.
Thank you. The next question is from the line of Ujjwal Kumar from Aurora Capital. Please go ahead.
Yeah, hello sir. So you gave a guidance of 11 to 15% growth on revenue, excluding the ethanol. So if we calculate on that on the base of FY25, so ethanol part this year was 247 crore. So it leads to just above an 8% revenue growth overall. So are we targeting single digit total top line growth for next year?
So this year top line growth has happened. This year top line growth excluding ethanol is around 15%, and we will see the similar kind of in the coming year. And we will see a slight growth in ethanol also.
Okay. So overall, including ethanol, can we expect double-digit growth next year?
Yes, double-digit we can expect.
Okay. And can you please quantify the margins that we should expect for the next year?
It will be similar on the similar lines, around 11 to 13%.
11 to 13%. Okay, sir. Thank you.
Thank you. The next question is from the line of Sahil Jain from Enigma Investments. Please go ahead.
Yeah. Hi, am I audible?
Yes, sir.
Yes.
Yeah. So hi, sir. I just wanted to ask about the adoption of maize in the industry. Like we have been putting a lot of emphasis on the rice for the most part, and now a lot of the companies are moving towards maize in ethanol production. So can you just throw some light on how that is supposed to be?
Can you please repeat your question? Your voice is not clear, sir.
Yeah. Am I audible now, sir? Better? Is it better?
Yes. Yes, better.
Yeah. So just wanted to understand, sir, what is the outlook of maize in terms of raw material ethanol, sir? So a lot of companies in the industries are moving towards maize rather than rice. Like they are actually prospective answer. So can you throw some light on how that will turn out to be, sir?
So I think your question is in regards to the outlook of maize, as most of the ethanol companies have moved to manufacturing using maize as raw material. See, the outlook for maize, the crop we are expecting to come good. We've seen an increase in the acreage cultivation of maize. Like in Madhya Pradesh, acreage cultivation has increased by 5%. Similar is the pattern in the other states also. Plus, apart from that, we are also doing certain exercises in our nearby regions to increase the cultivation of maize. We are collaborating with the government. We are educating the farmers that maize is a crop in which you can take three times a year. Plus, maize requires less care, less pesticides and other aspects. You just have to protect maize from the wild animals. That's about it. So we are doing an education drive also. So I think maize would be obviously once most of the plants have come up. So the entire chain to stabilize would take at least 2 to 3 years. 1 year has already passed, and we've seen an increase in cultivation in maize. And I think in coming 1 or 2 years, the entire thing would get stabilized. Demand and supply would get stabilized.
Understood, sir. Thank you so much. Just wanted to ask, are the prices of maize more attractive than rice as of now, according to the company?
As of now, it's comparable. So it's we are buying both maize and rice because rice we can buy at a certain rice has got higher percentage of starch. So at a certain price difference, we buy rice. So right now we are buying both the products, but major portion of the year we bought maize because rice has come down recently because FCI has released their rice for ethanol.
Thank you. This was the last question for today. I now hand the conference over to management for the closing remarks.
Thank you once again for your participation and engaging questions. We appreciate your continued interest and support for Associated Alcohols and Breweries Limited. As we move forward, our focus remains on expanding our premium product portfolio, strengthening our presence across the new geographies, and maintaining operational efficiency. Should you have any further questions or require additional information, please feel free to contact our investor relations team at Go India Advisors. I would also like to take this opportunity to thank the Monarch Network Capital team for arranging and facilitating today's call. We look forward to keeping you updated on our progress in the upcoming quarters. On behalf of the entire management team, thank you once again for joining us today. Stay safe and have a great day ahead.
Thank you.
On behalf of Monarch Network Capital Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.